What's going on, y'all? I'm gonna be doing a quick analysis or overview, recap, whatever you want to call it, of how I execute my trades. So first things first, if you have no knowledge on how markets work, first thing you want to be aware of is that there are three different patterns of delivery. The first pattern of delivery is going to be accumulation. Danger, can't even smell. Accumulation. You have distribution. And you have manipulation. So before you even think about entering a trade, you got to be aware of what state of the market we are in. So for example, here you have your manipulation, which is this move up here is considered your manipulation cycle. This move here, where we are just actively trading sideways, is going to be your depending, here was accumulation. If you're coming down, like up here for example, this is going to be your distribution. So essentially distribution is they're getting rid of stocks, options, currency, etc. Manipulation is the actual move, and accumulation is where they're loading into the move. So with that being said, keep in mind AMD, accumulation, manipulation, distribution. It is key to trading and price action. Once you have a basic understanding of how that works, then you can start getting into the actual trade entries and how you make trades, but not until you have an understanding of how markets work. So for example here, same thing again. Fuck, I shouldn't have erased them. So boom, you have distribution here, then you have manipulation here, then you have accumulation once again. That looks ugly. We have accumulation once again down here, and the next leg of manipulation can come up this way, or we can manipulate the prices lower. Now I will tell you how you can identify the direction of markets. It is not an exact science, but generally technicals could give you a pretty good idea of where prices are headed. So first things first, if you are considering entering a trade, like I said, you have to identify those zones. So distribution, manipulation, accumulation. So let's say you are here. How would you execute on a trade? Before you even think of executing on a trade, there's a checklist you need to a checklist that needs to be fulfilled. So one of those things is going to be a stop rate. Another thing is going to be a structure shift. I will talk about structure in a little bit, and there's different structures on different time frames. You need to review all time frames. Then you're going to have discount or premium prices. And you're gonna have PD arrays. I'll talk about all of this in a bit. It'll make sense soon. And you also need a solid RR, but I'm not gonna put that in there because that is not required in my opinion. Where the fuck? How do you center this shit? Whatever, not important. Alright, so this is what you're looking for when you're making a trade. Now, you need higher time frame ideas. This is a 3-hour candle. 1 day works as well, but my executions are going to come based off of the lower time frames. So for now I will focus on 3-hour for this example. So stop rate. If someone was looking to get long on Apple, you have accumulation here, correct? Now here you would have your stop rate. So anyone getting long here for this entire week got stopped out here. That would also be your manipulation in price and your stop rate. Now you need a structure shift. What is a structure shift? So a structure shift would essentially be you have lower lows, lower lows, lower lows, and then here you put in a higher high. So at this point you have a structure shift. When the structure has shifted here, you are okay to enter on a what do you call it? Like the contrary trade of the pattern. So I call these impulse entries. You would put your stops down here, enter on the breach of the structure shift, and keep tight stops. This is also a discount price. If you can see, anyone who has been buying for this entire week, this is a discounted price, and up here was a premium price. Now PD array, essentially all PD means is prior date. So you want to be looking at the prior day's action every single day, basically like training wheels. So what happened yesterday, and you want to use it as a reference or a guide of what could possibly happen today. So for example, here on Apple, I'm going to be using Thursday as an example. So you would come to the daily. Some people like standard deviations. I personally prefer fibs. They both work well. I'm not saying one is better than the other. Just me personally, I prefer fibs. So keep that in mind. Let me flip this to the other side. Okay, so here are my fibs. This is my prior day array. I have the previous day low, the previous day high, and the 0.5 being the previous day 50%. Now, the issue is, me personally, I like to call, well, it's not me personally. This is the golden pocket zone between the 618 and the 0.5. Generally, if a market is going to revert back to its prices, it'll happen there. So essentially, if Apple is going to head back lower to these discount prices, it has to respect this area, which it did. If Monday we open above that area, then the prior day array is invalid and we will continue to see more upside. As of right now, we do not have an answer, and that is why you need to be patient in trading. You need to wait until you get your confirmations and then make the trades. If you do not wait for a confirmation, a lot of the times you will end up getting punished for it. So I'd rather just wait it out. Now you can come down into the 3-hour, 15-minute, or whatever other time frame, and you can see that action from the lows. We had a premium price. Where's my crayon at? You had distribution up here, then you have your stop loss right here, and then you get the next move down. Once you had that move down, as you can see here, you have a structure shift. On the 15-minute, structure shifted upwards, so you could have entered buys here, stops below, and as you can see, we came back and retested that area, stopped them out. So this would be your stop loss rate. This is your this could be your entry idea, and this would be your execution. So you execute here, and then you get this move up. Like I said, we have yet to breach the 618. Therefore, from here, prices could revert lower. If you do happen to get a close above this area, you have clean traffic all the way up to this last area. That's another thing I have forgotten to touch about. So there are a couple values you need to keep in mind every single day, and that is going to be your, again, has to do with the previous day array, but you're going to have to focus on the high. Matter of fact, let's start like this: the low, the high, the open, the close. So essentially each candle has a high, a low, an opening price, and a closing price. That is how you identify the candle bodies, wicks, etc. All it is identifying is your your high, your low, your open, your close. On a bullish candle, you would have your low, your open, your high, your close down here. If you do not know how to read candlesticks, it is the basics. Like, it is the most simple thing you can do, and if you don't understand that yet, maybe you should start there. Once you understand all these fundamentals. So for example, now here on the previous day array, like I said, we have that resistance area here. If we do break above from here, I do expect this trade to come back into the 1618 area, and if it gets above that area, you have the 2618, and the next target would be the 3618. I wouldn't be surprised if we come back to these areas. I said it since a couple weeks ago. Apple left a couple wicks that seem interesting in my opinion. I wouldn't be surprised if we see a move up, followed by a move up on Apple and a move in SPY into the 460 area. So whenever executing on a trade, keep in mind you need to have a stop rate, you need to have a structure shift, you want to buy into a discount or sell into a premium, you need to check your previous day array, your high, your low, your 50%, where are you in the current day, and use that as a guide. So every day you look a day before and you're going to use that as your levels for the day. You can also look at previous week arrays and previous month arrays, but that is a higher time frame trade and your focus should be on the daily.